What causes damaged business credit and how do you fix it? So do you know that you have issues right now in your business credit reports that need fixed? Maybe you're struggling to get the loans you need. You're struggling to get credit cards, credit lines. You're not able to get approved. And maybe you know it's because of issues on your business credit reports, or maybe you don't even realize that that's the actual problem that you're dealing with. Or maybe you're just looking to build business credit and you want to know what the biggest problems are to avoid, to make sure that you have amazing business credit reports and scores so you can get the most money for your business. And if you do have issues, you want to know the process to fix it. Well, today I'm going to teach you what causes the majority of damage on business credit reports. I'm going to teach you exactly what you need to do to avoid those problems before they even occur. Oftentimes, the solution is to get the money you need to fix the problem so you never even have the problem. But if you do have the problem, I'm also going to teach you how to fix your business credit reports with Dun & Bradstreet, with Experian, and with Equifax. We've got a lot to go over today, okay? So by the end of this training, you're gonna know exactly what causes the majority of damage on business credit reports. And you're also gonna know exactly how to fix it. And by the end of this training, I'm gonna give you free access to your business credit reports. It's $249 if you get it directly. I'm gonna help you get that for free so you can look over what's going on. You can fix any damage you need. I'm even gonna give you the secret step-by-step formula to fix damaged business credit with Dun & Bradstreet, with Equifax, with Experian. Whew, a lot to go over. So let's dive in. So first of all, let's talk about business credit, because remember, we are talking about fixing your commercial credit reports. So this is credit that is in a business's name. And if built correctly, it has nothing to do with your personal credit, nothing to do with your personal scores. You can get it even without a personal guarantee. And the way that commercial credit reports are structured, the way that credit scores are structured are completely different, which is why we need to do this training, because fixing consumer credit, way different than business credit, because that's governed by a law called the Fair Credit Reporting Act, which doesn't even apply in the business world. So remember, business credit has to be built proactively. This doesn't happen accidentally. You don't go into Target and be offered a no personal guarantee credit card like you are offered a credit card in the consumer world. So you've got to get credit that reports. You have to be very intentional to know how the scores work, which we're going to talk about today. And you have to make sure that you're paying those bills on time, because paying the bill even 1 day late can be devastating to your business credit reports. See, in the consumer world, you can go 30 days late before they even count you late on your business credit reports. In the business world, 1 day late is 1 day late. You get put into a 1 to 30 day category, or DBT, days beyond terms, and damage starts occurring the day that you are late. So very different than consumer credit, and one of the reasons you need to make sure that you're paying those bills on time. Now, business credit can be damaged by a lot of different things: not paying bills on time, carrying too much debt, closing old accounts you may have, not fully separating your consumer and your commercial credit. Reports dominated by negatives with droves at which drove out the positives can be some of the biggest factors. And we're going to decode each one of these today, because again, the best cure is prevention. If you know what causes the majority of problems, you can avoid them and then never have damage to actually fix. But even if you do have the damage, we're going to talk about that as well. Andre, hello. Thanks for coming in from YouTube. Everybody, thanks for tuning in from Facebook, YouTube, and LinkedIn and saying hi. I appreciate it. So damage number one, not paying bills on time. So this is such a vital part of your business credit scores, because the primary scores from Experian, Equifax, and Dun & Bradstreet are based on one thing and one thing only: how you pay your bills. Now, I say primary score because you actually have 5 credit scores with each one of the reporting agencies. If you look at our other training on our social channels, you can learn about how each one of those scores work. But the main scores with Experian, D&B, and Equifax are all based on how you pay. So the D&B Paydex score, for example, ranges from 1 to 100, and 1 to 49 is considered high risk. A score of 50 represents that the credit provider can expect payment to be 30 days late. So if your score is 50, then it reflects that you can expect that you're going to pay somebody 30 days late on average. Now, a score of 1 means they can expect it to be 4 months late or 120 days late. So look, I can show you what a 49 score with D&B means, an 80, a 90, a 70, but the score literally depicts how you pay your bills. So you've got to make sure that you're paying your bills on time, because again, even 1 day late, or 1 day early, or 10 days early makes a difference in the actual score that you will have. So reasons for this kind of damage: well, a business owner is overwhelmed. They don't have all the time to be able to make sure that bills are paid when they're supposed to be paid. Or the company's waiting on payments to come in from clients and it doesn't yet have the money to be able to make the timely payments. Or sometimes the business is seasonal. So maybe you're getting into a time of year like down here in Florida where people aren't going to be out at the beach. They're not going to be in the water, and you're a water sports business and you know you're going to come into a slower time, which makes it harder to be able to pay those bills. So how do you fix those things? Well, if due dates are slipping, then consider hiring somebody to actually keep an eye on when your payments are due, or use some kind of Excel tracking to actually make sure that you look out for this. So there's all types of what are called fractional bookkeepers, fractional CFOs, fractional controllers that you don't have to hire full-time in your business. You could just hire them as needed, and they can help you keep up with those things to make sure that you're always making timely payments. So something to consider there. Now, overdue bills from your customers will cascade through your business's own accounts. If your customers are paying you late and you're getting money late, well, then it makes more difficult for you to be able to pay your own bills. This is where you might want to consider account receivable financing. If you have AR financing, you can let your customers pay on terms a certain amount per month for so many months. The AR factor or the lender will give you 90% of that money the next day. So let's think about this. You give your customers 5 months to pay. With AR financing, you get 90% of their money the next day. It fixes your cash flow problem. It makes it easier for your customers to pay, and that makes it easier to get your money on time and then be able to actually pay your bills. And again, you can get financing for as much as 90% of the outstanding invoices for your customers. So a good solution to that underlying problem that can help you avoid the problem all to begin with. Now, AR is extremely valuable, and your personal credit doesn't even matter. They're going to look at the business credit quality of the actual company you're dealing with or the customer that you have, not yours. So it's a good way to make it easy for your customers to pay and to mitigate any cash flow issues you have to make it easier to pay those bills on time. Okay. Now, the number 3 tool for damage of this type is to add an off-season product to a seasonal business. So look, if you have a business that's seasonal, then you need to think about adding something else that's not seasonal to that business. So for example, let's say that you see that you're a ski resort, right? Well, then instead of actually coming in and only having one good season on your off season, maybe you want to sell a digital course that teaches people how to ski and prepare for next season. Maybe you want to teach them how to take snow skiing skills and apply them to water skiing for summer. So there's all kinds of things you can come up with as products to be able to sell during a slow season to be able to make up for it and get your cash flow to come in the door and avoid going late, which causes the most damage you're going to have to your business credit reports. Now, another form of damage to your business credit reports is carrying too much debt. And don't forget, if you have damage from this, as we get near the end of the training, I'm going to teach you how to fix the damage with each of the reporting agencies. But let's prevent the problems before they occur first. So credit utilization isn't the only thing that business credit looks at. As a matter of fact, it's not even a big factor unless you look at Experian, but it is a big factor in some of the other scores with D&B, Equifax, and Experian. So the main thing, as we talked about, is to pay your bills on time. But you also will have a better credit if you're able to pay off the balances you have at the end of every single month. So if you're able to pay off those balances, it's going to help your overall 5 scores with each of the reporting agencies. Okay, so sometimes you might see equipment as actually being a problem here. Maybe you actually have too much money that's owed on certain things. So sometimes you see equipment you really need. Okay, so you buy it, but then of course the bill comes due. Another reason could be just not shopping around enough for better financing on the deals that you are getting. So this can be an issue if you have poor personal credit. Okay, you might pay much higher interest rates than what you really should. So equipment financing can kind of help with this. If you come in and are able to get financing for the equipment, then you're able to better afford what you have, not carry a bunch of debt, okay, not be able to rack up credit cards and things like that that have utilization ratios that could be adversely affected. This is one of the big mistakes I see business owners make. People go out and get a credit card or a credit loan and they start buying everything with it. So one of my friends was starting a business and said, I need a business loan. I need a credit card. I need a credit line. What do you need the credit line for? I needed to buy a piece of equipment. You don't need a credit line for that. You need equipment financing. By using specified financing like equipment financing to buy equipment or inventory financing to buy inventory, especially if you're an e-commerce store, then you keep that money off your credit cards, off your credit lines. You don't max out your credit lines or max out your credit cards and let them sit there accruing interest and not be paid off and hurt your debt ratio. So by getting this kind of specified financing like equipment financing, financing or inventory financing, you can leave your revolving credit alone, help improve those debt ratios, and help avoid the issue before it even occurs. So some things to consider there to be able to help your overall revolving utilization. So let's talk about closing overall or closing old accounts. Average age of your credit score or credit accounts is a factor that tallies into some of your business credit scores. So the older that you have all of your accounts and the oldest of your oldest account calculates into your overall risk. As a matter of fact, I see plenty of Experian credit reports where the reason for the score being low is that you haven't had credit long enough. So when you have credit that's open longer, you don't want to close the credit. If you close the credit, then you lose that being your overall average account age, and you lose that being the oldest account that you have. But by not closing those accounts, you improve the overall age of all your accounts, and you may even not close the account that's been open the longest, okay? So remember that you don't want to close older revolving accounts if you don't have to, because those accounts are helping with some of your overall score calculations. And you also need to make sure you're using the accounts that you actually have, okay? So on your business credit reports, it doesn't say your credit limits. It says the recent amount of credit that you've used. So it's very important that you get credit and you use the credit to make sure that your business credit reports are updated and showing that you're using the credit. You see, the key isn't just to go get a bunch of business credit accounts that report. The key is to get a bunch of business credit accounts that report and then pay them on time and keep using them, keep active. That way you improve your overall bills paid as agreed, okay? And you avoid this kind of damage. You're not closing old accounts. You're creating more accounts and leaving them open, giving you more positive payment experiences, which help avoid issues and overcome negatives. Think about that. Your Dun & Bradstreet Paydex score, Experian, Equifax, their main scores as well. Look at how you pay your bills on average over 90 days. They predict your risk of going, late in 90 days and your risk, and that's calculated based on how you pay your bills overall. Overall. Average. These are important words. If you have 9 positive accounts and 1 negative, you're really going to offset the damage of the negative. So the key is to keep building accounts, keep adding accounts, keep using accounts. And that way, if you ever have damage from one account, the positive way outweighs the negative. But if you close older accounts or you only have a smaller amount of accounts, then if you go late on even one of those, it could be catastrophic to your overall business credit reports. So damage number 4, not fully separating business and personal credit. If your personal business credit isn't separate, then you may be offering up interest-free loans from your personal finances to your business, and you don't want to do that. Or maybe you're doing the same in reverse. Your business bottom line will suffer if you withdraw money for school supplies or vacation or the like. So you really have to make sure that you stop this co-mingling of funds. And I have emails pouring in here, so I'm going to close my email Outlook here so I can figure that out and stop that from happening. Okay, so you need to make sure that you don't commingle funds. You need to make sure that you clearly have personal credit and business credit separated. You need to make sure you get business credit cards for your business that report on your business credit reports and personal credit cards for your personal life that report on your personal credit reports. And you need to make sure that you're not commingling funds. Separate bank accounts, money going into your business account for your business, your personal account for you personally. So if business and personal funds stay together, then slow payment on personal expenses will damage both types of credit. So you need to get a separate business bank account. You need to make sure that you get separate business credit cards. You need to set up an EIN. You need to set up a separate entity to actually separate your liability as well. Okay, another tool to fix this is, building business credit properly is all about enhancing your fundability. So you need to make sure that you come in and do all the things that make you more fundable. Set up your business structure the right way, your phone number, your email address, your website. All those kind of things are very, very, very important to avoid this kind of problem on your business credit report. By setting up your fundability, you have a better ability to separate your personal and business credit because you're able to get accounts in your business name that are report on your business credit reports. But if your fundability is jacked up, you can't start building business credit. So you need to make sure that you improve your fundability to be able to get business credit cards, start building business credit for your EIN that's not linked to your social, separate personal guarantees, separate personal credit checks, and start letting your business actually fund itself. Now, another way to do this is to actually build business credit the right way. Okay, so in order to do this, after you improve your fundability, start getting positive accounts on your business credit reports. Granger, Crown Office Supplies, Uline, they all sell products and services you need now anyways, but they report those product purchases to the business credit reporting agencies. They'll give you credit when you have none, and they report the credit to the business credit reporting agencies. So look into these kind of sources that will give you credit to buy the stuff that you're buying now anyways. And as you build this initial business credit report score, you're able to get most kinds of revolving store credit at everywhere you can imagine without a personal guarantee, without a personal credit check. You get rid of these personal guarantees, which brings me to the number 4 solution here. You need to shop around to get away from personal guarantees if you can. There is personal guarantee funding that's out there. A lot of it is backed by collateral. If you provide some kind of asset as collateral, you can get around some personal guarantees. There's even some funding products like business revenue lending, which is the number 1 most popular kind of business financing that exists today, that you can actually get without a personal guarantee. Don't get me wrong. 9 out of 10 sources that offer that require a guarantee. 1 out of 10 doesn't. So when you work with a good broker that knows what they're doing, they can help you get more funding without a personal guarantee. Some other kind of funding, credit lines, loans, some of that stuff you can't get until you have really well-established business credit. But from the inception of your business, from the beginning, you can get most business credit cards without a personal guarantee, without a personal credit check. And if you have some kind of assets you can get as collateral or use as collateral, then there's a good chance you're able to come in and get around personal guarantees. You can even use a credit partner. You can even use a credit partner's assets. So maybe you don't have stocks, bonds, 401ks, or IRAs. You could tap into a credit partner, a friend, a family member, a potential investor that does have those kind of assets, get around guarantee. They don't have a guarantee. You don't have a guarantee because the asset serves as enough collateral to offset the lender's risk where you can get around those personal guarantees. Okay. And you also want to shop around for better funding. Okay, so make sure not only are you getting away from the personal guarantees by getting 401k financing, IRA, stocks, bonds, but you're also coming in to know what kind of funding is out there and what kind of rates are available. Okay, a lot of this funding offers interest rates of 5% or less. So you're getting no personal guaranteed funding and low interest rates, and personal credit doesn't even matter. Revenue doesn't even matter in a lot of cases. So even as a startup, you're able to do it. Now, the 5th type of common damage I see to business credit reports is basically done by negatives drowning out the positives. And we talked about this. So these negatives can sit on your report for years. So Experian, for example, will leave bankruptcies on your file for nearly 10 years, continuing to cause damage. And collections will stay on your commercial reports for up to 7 years. The type of account is different on how long it stays on a credit report for every bureau. So we could sit and do a whole session just on how long everything stays on your business credit report. But just like consumer credit, 5-10 years, it's pretty typical on how long these negatives can sit there and continue to cause damage. UCC liens, tax liens, judgments, collection accounts, derogatory late pay items. All these issues are going to negatively impact your overall business credit scores. Now, of course, you can prevent much of that form of damage from, hitting your business credit reports with prudent financial management, the things that we've talked about today, okay? Making sure that you don't get loans with lenders that attach UCC filings. Make sure you're not going late on the actual payments so they don't have late payments that appear on your business credit reports, etc. Now, trade references can actually be added to your business credit reports as well, and that offsets the negatives that you have on there. Okay, so you can actually add a trade reference, and we just did training on this with Dun & Bradstreet, where you can add accounts you already have that are paying agreed to your D&B report. The more positive you have, the more the average improves of how you pay your bills and the better credit you're going to have. So considering adding trade references with Dun & Bradstreet, it's a great way to be able to improve your overall business credit scores. And the other thing is, like I said, add more positive than negative. I don't care about consumer or commercial credit. It's the same with both. If you have more positive than negative, you're going to have a better chance of having a good score. So get more trade experiences than you need and pay those as agreed. The more positive you have, the more you offset the damage, the negative. And again, fix any negative that you have. We're going to talk about that as we near the end of the training today. So bonus tool to fix all this, open up the lines of communication. Look, if you're struggling to pay a bill, tell the credit issuer. See if they'll work with you. See if they'll extend the term. The way that it works is that the credit issuers have to report all payments to the business credit reporting agencies. That's what they require us to do. Okay, we report our clients' payments when they purchase to the business credit reporting agencies. They build the trade line just by actually starting with us to build business credit and getting financing. And I can tell you that the reporting agencies make us prove or supply the proof of payment, not proof. They make us supply the payment experiences, how our customers pay, whether they pay on time or not, which means it could benefit you that we report when you pay as agreed. It could not if you pay late. Okay. So the way to be able to fix this is if you're going to go late, call the credit issuer and have them extend your term. If they extend your term, they can reflect in your account your term was extended. Then when they report that payment to the business credit reporting agencies, it's not late because you're within the new term that they extended. So a couple of takeaways here. Remember that the credit issuers have to report all of your payments, whether they're on time or not, to the credit reporting agencies. So if you know you're going to be late, communicate with the credit issuer, get them to extend the term, then you won't be late. You'll be on time because you'll be within the extended term. But it all comes down to you actually communicating with them. You also need to monitor your business credit report with DNB, Equifax, Experian, or even in CreditSafe. It's another one to consider. The reason for this is that, look, a lot of accounts, not a lot, all the accounts on your business credit reports will not tell you the credit issuer's name. They'll tell you the overall type of account. And the more credit you get that reports to the business credit reporting agencies, the more you could lose sight or forget of what's due when. So by making sure that you monitor your business credit reports, you can see damage early when it occurs and fix the damage. Remember, business credit scores are primarily driven on how you pay, how early or late you pay. DBT, days beyond terms. If you monitor your credit reports and see that they reported you 1 day late, you can immediately pay that bill, work on fixing the damage before that account gets 20, 30, 40 days late, which more adversely affects your score. Remember, you can have a 50 score if you pay on average 30 days late. So if you only pay 1 day late, you've got a chance to get involved right at that point in time. If you're monitoring your business credit reports, fix that, pay the account, and then never let it continue to get worse, which will cause more damage to your scores. Now, the third thing, as I mentioned, let's talk about disputing derogatory items. So each one of the reporting agencies can potentially make errors. They all have mechanisms in place to dispute those kind of mistakes. So a CRA, a credit reporting agency, may ask you to send in documentation to verify it. They may not. It all comes down to disputing it directly with them. So this is very important. In the consumer world, when the credit bureau reporting agencies went to computers in the 70s, a law was passed called the Fair Credit Reporting Act, which regulated what they can do with credit information. It was crazy at that time. Wild West. Literally, this is what would happen. Somebody'd work for Equifax. They would call your neighbor. They would get gossip about you. Then they would sell that to anybody else that would pay the money for it. I swear to you, that's actually how the process worked. Equifax, Experian, and TransUnion would bonus their employees the worse the information they could get about you. So when this thing went computerized in the 70s, the government was like, whoa, hold on. We've got to pass a law that regulates this, and that is known as the Fair Credit Reporting Act. The Fair Credit Reporting Act basically regulates how the credit bureaus and credit issuers can handle your credit information, what they can report, how they can report it, and it gives you the ability to dispute. The Fair Credit Reporting Act does not exist in the business world. There's no regulation of how your files are handled by the reporting agencies, how it's handled by the credit issuers, and there's no actual structure by the government of what to do when you actually need to dispute something. That's why there's a different process with each one of the reporting agencies. So the business CRA, if you challenge them, will then recheck the status of whatever they got that information from, and then they will decide if they want to delete it or not. Now, here's a little tip. A lot of stuff that appears on your consumer and your commercial credit reports comes from LexisNexis. So you need to go get a copy of your LexisNexis credit report. Mine's 300 pages. I show it on webinars all the time. You need to dispute anything there first. Try it without submitting proof. If they come back and say you need to submit proof, submit whatever proof that you potentially have. And one of those two, whether you don't submit proof, they may delete it, or they may delete it when you actually submit proof. Let me give you an example. I owned a mortgage company in 2008. I defaulted on credit cards. I legitimately had some judgments as a result. I fixed them on my consumer credit report, but I never fixed them on LexisNexis. But I also had some items on LexisNexis that were judgments that weren't right or at all. They were completely wrong. They were just made up. They weren't even judgments that I had. So when I realized that that was the case and it was running and causing a problem with an SBA loan, I disputed the judgments that were wrong. I identified to LexisNexis, these ones are right, these ones are wrong. You know what LexisNexis did? They deleted them all. They removed every judgment from my LexisNexis credit report. There was like 5. Like 3 of them were real, 2 of them weren't. I said, these 2 are not right. You need to remove them. These 3 are. They deleted all 5. So there's a lot of benefits you get by disputing with the source, which is LexisNexis. You want to start there. Okay. Next, if you see the damage on your business credit report, figure out which one it's with. A lot of people say, how do I fix damage in business credit? I say, which bureau? So figure out, pull your business credit reports. I'm going to teach you how to do it for free here as we wrap up. Okay. Get your business credit reports, figure out which bureau is reporting the damage. Okay. Then my advice is if you have damage, don't just go get your business credit reports, get a more in-depth report from the actual credit issuer, or excuse me, from the credit bureau that you have it, Dun & Bradstreet, Equifax, Experian, then dispute the item directly with them without documentation. And if you need that, if they come back and don't verify it, then get whatever documentation you can and supply it to them. So again, it starts with getting your credit reports. You can get your Dun & Bradstreet credit report right here. These are all paid. I'm going to teach you how to get them for free. dnb.com/about-us. Okay, you can get Experian report at Business Credit Facts. You can get Equifax at equifax.com/business/credit-information. Equifax just stopped offering business credit reports. So I'm not even sure if you can get it, but I'm going to teach you how to get it for free here in a minute as well. So you got to start by getting your credit reports. Then you've got to dispute the negative items with each one of the actual credit reporting agencies. Dun & Bradstreet will do this through what's called their dashboard. It's their new system. It used to be called something completely different, okay, but now it's called their dashboard. So you can get your Dun & Bradstreet credit report with DNB, go to their dashboard, and dispute it directly with them. If you're disputing with Equifax or Experian, you want to get their credit monitoring with them, and in their credit monitoring portal, not NAV, not anywhere else. You want to go get your actual credit monitoring directly from them if you find out there's an issue and dispute online through their actual portal. Now, DNB used to be called iUpdate. Now it's our dashboard, but if you still search iUpdate, you'll get redirected to where you need to actually go to get that. Okay, now again, if you're going to submit proof, never send the originals in case you need them again. Okay, so fixing credit report errors also means you specifically detail any charges in your dispute. Here's what I found. Guys, I have never disputed an item on a business credit report and never seen one disputed that didn't get deleted. I'm not telling you that everything you dispute will get deleted. I'm not saying that. But I'm telling you, we've helped 42,000 people build business credit. And today, I've never seen one person dispute and not get the items deleted. The business credit reporting agencies are fairly easy to dispute and remove derogatory items with for a lot of different reasons. First of all, there's a real problem when they don't even tell you the creditor that's reporting the information. It creates all kinds of issues right away. So I found that if you go in, get your business credit reports, I'm going to teach you how to do it for free as we wrap up, and you look and see, and if there's a derogatory item on Dun & Bradstreet, you go to DNB, you get a Dun & Bradstreet detailed report from them, you go into their dashboard, you dispute that account, not even providing proof. In almost all cases, that account gets deleted. If they come back and say, that's not accurate, then you might want to supply some proof. So let me give you an example. We went to Experian, and we said, Experian, you have our NAICS code right. Our industry code is not correct. We just need you to dispute it or to update it. Just update it, no big deal. Experian wrote back and said, sorry, we think we have it right. We're not going to correct it. So we went back to Experian. We provided our Dun & Bradstreet and Equifax credit report and our tax returns. And we said, it's not right. Equifax has it right. DNB has it right. The IRS has it right. Why are you saying we're in an industry that we are clearly not in when everybody else has it right? You have it wrong. Guess what they did? Dispute. They fixed it. So again, that's an example of where we supplied nothing and said it's wrong. They said we think it's right, which I'd never seen them come back and do that before. We supplied what we believe to be proof, and as a result, they got it deleted. Now remember LexisNexis, I told you about those judgments. You know how hard it is to prove a negative? They say I have judgments. I say I don't. How do I prove I don't have judgments when I don't have judgments? So I went to the actual courthouse and got proof from them of, hey, here's everything that's in that county on my record. You can see it's not there. I supplied as loose a proof as I couldn't really get proof. I supplied loosely what I could, and they removed all judgments. So try to dispute without supplying anything to them. And if it doesn't work, then you actually want to come in and supply whatever proof you can. If it still doesn't work, then you want to escalate and you want to go to mail directly to the bureau, even certified mail. And at that point, you may want to mention that you're interested in getting an attorney involved. Look, this is inaccurate. I've asked you to fix it. You wouldn't do it. I submitted you evidence that I had. You wouldn't fix it. Now I'm forced to get an attorney involved because I'm not able to get the funding that I need. Again, you need to fix this. When they get that, oftentimes they will delete it. But again, I've never even seen it get to this level. I teach this level, but I've never seen it get to this level. The first two ways, disputing with them, then providing proof if need be, have gotten everything that I've ever seen derogatory that has been disputed, delete them. And Watch Out Media says, good morning from Vegas. I love Vegas. Watch Out Media. Appreciate you coming in. Gordon, very true from LinkedIn. Thanks for tuning in. Dane, is it necessary to report heavy income on 2019 corporate taxes to qualify for 150,000 EIDL? Or is it more based on your personal credit strength? The 150,000 for EIDL really has to do with the actual the amount of damage that you're basically stating that you dealt with or had as a result of COVID, and more your revenue than it does personal credit. Personal credit's a factor, as it is with all SBA, but it's more revenue than actual credit. But you don't have to have a ton of revenue to get the 150. But in that case, to answer your question, 150,000. And Pepe says 150,000 is no doc. If you're talking about credit line hybrid, yes, you can get approved for up to 150,000, no doc, 0% credit lines. Give us a call. Our phone number's on the bottom of these slides. And yes, with EIDL, you can get up to about 150 grand too. But they don't make you supply very much documentation at all, which is what Pepe is saying as well. Okay, so dispute on your Equifax credit report. Here's the special link with them. Equifax.com/small-business-FAQs /# dispute-FAQs. It gives you all the information you need to dispute. Experian.com/small-business/credit-information-JSP will take you directly how to dispute with them. And with D&B, it's dandb.com/glossary.paydex. That will give you the phone number, everything you need to dispute with them. But again, try disputing online with their platforms first. Then you can try by phone, but I go to certified mail if you follow the course of action that I've already given you today. Okay, and Watch Out Media says if you have, let's say, 3 businesses, first business closed down, and business credit on your other separate business be affected. No, it won't be. As long as it was under separate EINs, you won't be adversely affected. It's why if you have multiple businesses, a lot of people like to put them under one umbrella company. You can do that. But the key is for every one of those businesses, you need to build business credit for a separate EIN. The minute you have different DBAs all linked to one EIN, damage to one of those DBAs can affect that one EIN. So it's all linked to the credit that's linked to the EIN. So as long as you had separate EINs in those 3 businesses, then Watch Out Media, then you're fine. But if you have one EIN they're all under, then you probably got problems. Okay, and Scott says, I dispute by email, and that has worked great with Experian, and dispute online with D&B, and they remove LP right away. Scott's saying the same thing. Look, I disputed online, and I disputed through email, and I got it deleted right away. And guys, this is what everybody, it's the same experience. You just need to take the time to get your reports in dispute. If you take the time to get your reports in dispute, then most of the cases you can get these derogatory items deleted. So again, the single most important thing you need to do, pay your bills on time. I know it sounds stupid. I know you're like, that's easy, but you got to understand there's sources like Uline that won't even send you a mail bill unless you're late. So you've got to keep track of this stuff because some of them won't even bill you. In the vendor space, you need to keep track of what you have and when you can actually pay. Hire somebody to help you with this if you need. Separate the personal and business credit accounts. Keep older accounts open longer. Add as many positive payment experiences as you can. Even if you use D&B's Credit Builder to add trade references, talk to your creditors if you're ever going to go late to prevent the issues, and make sure you get credit monitoring so you can keep track of this. Because remember, the difference between 1 day late and 30 days late could be a 30-point difference in your score. So the minute you see problems, you need to be aware of them to actually get it fixed. And don't forget about AR financing, equipment financing, inventory financing. These things will fix the issues that can cause cash flow crunches that are the underlying issue of going late. Let's be honest. If you have access to credit lines, credit cards, and money, and you fix your cash flow issues, you're probably not going to have the majority of these issues. It's why I introduced funding in today's training so you can actually get the money you need to avoid those issues. Want to get your credit reports for free? Give us a call. 877-600-2487, 877-600-2487. On a consultation call with us, our team will help you get your business credit reports for free. Dun & Bradstreet charges $150. Okay. Equifax charges like $20. Experian charges like $50. Experian charges $50. So it's like plus, I don't even know. It works out to be like $249 from the bureaus direct. With us, it's 100% free. We'll get your credit reports. We'll go over them with you. We'll give you advice if you have derogatory items to get it fixed. We'll do a fundability assessment to see the issues with your fundability, what you need to fix there. We'll pre-qualify you for all funding that exists. It all happens on one call. If you look at our reviews online, you'll see people rave about this consultation call, and it's 100% free. All you have to do is give us a call or send us an email, and we'll get that scheduled for you as well. And Dane says, thank you. Awesome. Do you guys offer EIDL help? You can go right to the Treasury with that. We can get you to our SBA guy, and our SBA guy will charge you a fee to get it done, but he's phenomenal. So if you don't mind paying a fee, I'll get you to our SBA guy. I pay him fees. Any kind of loan we get, EIDL, here's your fee. PPP, here's your fee. And he gets some phenomenal results. So if we can help you there, give us a call. We'll get you turned on to him. Good morning, Card Design from Los Angeles. Appreciate you coming in. And thanks for your service to the world. Thank you, CAD Designer. Appreciate that. DL says, I'm building my business credit. Never had any. I have 10 medical collections, 695 FICO score. How do I build business credit for my future business without using vendor accounts? Well, you can use a program called Credit Line Hybrid that might work for you. There's 3 ways to build the initial business credit. Vendor accounts, which I talked about today and you know about. Credit. The other thing we talked about today is DMB's Credit Builder. That way, you use $150 a month, but you can take accounts you already have and add them to your DMB credit profile and score. It will get you a jump start. And the third thing is use good credit to be able to get credit lines. You can get up to $150,000, no dot credit lines, 0% rates. Give us a call. We can help turn you on to that kind of funding. But if you have these collections, they may prevent you from getting approved for Credit Line Hybrid. I won't know until we look at your credit, and we can do so with the soft inquiry. The funding source can. We can get you pre-qualified within 24 hours without any hard inquiries on your credit report just to figure it out. So give us a call. We'll talk to you about that third option as well. And CAD Design says, I need AR and equipment financing. Give us a call or go to creditsuite.com/get funding, GETFUNDING, get funding. If you go to creditsuite.com/get funding, fill out a handful of questions. You'll talk to our funding team. They can talk to you about a source for equipment and AR financing that can help you there as well. What a gem. Thanks, CAD Design. Appreciate it. And remember, if you got value here, go to the top right of our page, creditsuite.com. We go live Tuesday and Thursday at 1, not this week because it's Thanksgiving, Wednesday at 11, all Eastern time. We have daily tips on our channels like Instagram, on Twitter, on Facebook, and it's all about helping you get money to grow your business. It's all about getting credit cards, getting funding, improving your fundability. So if you want to get the most money for your at the best terms, if you want to get away from personal guarantees, if you want to get away from personal credit checks, then make sure that you go to creditsuite.com. And don't forget, you can go to creditsuite.com/monitoring to get your business credit reports. creditsuite.com/monitoring. $24 to get all 3 credit reports. It's the cheapest in the world. Nobody is cheaper than getting your business credit reports than going to creditsuite.com/monitoring. If you give us a call, don't forget, we'll give them to you for free. If you got value here, do me a favor, hit the like button, hit the love button, please. I can see in real time when that happens. It means a lot to me. I try to pour my heart and soul into this, and all I ask is that you just give me a like, give me a love, give me a share. It's so little effort to do. And if you are also following us on a channel, subscribe. If you're on YouTube, subscribe, click the bell beside the subscribe, click select all, and that'll notify you whenever we go live in the future as well. Mark says, I just started LLC and business account, but my personal credit's awful. I just need a business credit card, and I need a $5,000 to $10,000 loan for credit. We can help you with that. Give us a call, and also make sure you go to creditsuite.com/live, and creditsuite.com/live, because we're live right now, will actually give you a step-by-step guide on building your business credit as well. Mark, that guide, business credit or creditsuite.com/live will give you the step-by-step formula to build your business credit. Give us a call. We can talk through it with you as well. Dane says, this is by far the most valuable and an underrated live on the planet. Please share and spread, guys. Thank you very much. And I appreciate it when you like and share. And CAD Design says, I have a new LLC looking for startup funding for real estate investing as well. We can help you with that. Give us a call. And don't forget to check out our social channels. We have a lot of training that will teach you a bunch of different ways that you can get money as a startup business. Thanks, everybody, for tuning in. Have a great day. And I look forward to seeing you on our next live training where we talk about more cool ways to get money for your business. Thanks. Have a great day.